Welcome. We'll get started shortly. Before we begin, here's how to earn continuing professional education credit for attending this session. There are no polling questions or attendance checks. Instead, you will demonstrate your knowledge by taking a brief multiple-choice quiz using the Earmark app. Visit earmark.app in your web browser. You can also download the mobile app by scanning the QR code on the screen. Log in, or if you're new, create your free account. Be sure to use a valid email address because that's where we'll send your course completion certificates. From the home screen, scroll down to find the course. You can also tap the magnifying glass icon to search for the course. Tap on the course artwork, then the Enroll button. On the Course tab, you'll find the recording and quiz questions. Complete the quiz to earn your CPE certificate. It takes us a few days to create the course on the app, so if you are attending this session live, please wait a few days. We'll email you a link to the course when it is ready. If you have questions or need help, email us at support@earmarkcpe.com. And now, on to the event. Hello, and welcome back to Earmark. I'm your host, Blake Oliver. And today we are tackling a topic that is on many firm owners' minds, successfully selling a client accounting services practice. I am thrilled to be joined by Lynnette and Craig Connell, who recently navigated the complex process of selling their boutique firm to a larger regional player. They'll be sharing their journey, including the challenges they faced and the strategies that led to an impressive 150% revenue growth post-acquisition. Whether you're actively considering a sale or simply planning for the future, this episode is going to offer valuable insights to you. So let's dive in and learn from their experience. First, Lynnette, welcome to the show.
Thanks, Blake.
And Craig, great to have you as well.
Thank you. Wonderful to be here.
So, Lynnette, I'd love to start with where you were when all this began. You had a firm called Click P&W. How did you come to start your own firm? How did you two get that going?
Sure. So I had been formerly an auditor, so had Craig. Each of us had left auditing to do fractional CFO and controller work. So I'd been doing fractional controller work for a period of time. Craig and my skill sets really complemented one another. Craig focused on strategy, high-level financing, and I'm much more of a technical accountant. So we decided to join forces with Click P&W and complement one another and offer something that most of our clients were asking for, is that when we were each doing advising, our clients often asked for like the full range of bookkeeping. And that's not something that Craig or I necessarily offered ourselves, but we decided it was obviously needed in the market. So that's where the inception of the idea really came from.
So you were doing the controller type work, and
That's right.
Craig, I take it you were doing the CFO kind of work?
Yeah, that's correct. I would come in and step in on the strategy side and more forward looking.
So tell me more about the services you were offering. What kind of clients did you serve? Like, where did you take your firm? How, give me the like high level view.
Yeah, go ahead, Lynnette.
Oh, sure. I thought you were asking Craig that question.
Either one.
So our clients were typically professional service firms and quite a bit in the tech world. When we started out, we were kind of taking whatever our contacts sent us, which in the Seattle area, which is where we're located, is a lot of professional services, and tech is just where we knew people. Also, though, from my auditing background, that was a big focus of some of the auditing clients that I'd had, so I was really familiar with that. Additionally, a lot of our clients ended up with subscription model revenue. And so we started, at least I started having a bit of a niche practice helping with revenue recognition and also pre and post, helping my clients pre and post acquisition really set us up to think about our own future. I helped a lot of clients pre-due diligence, post-due diligence, deciding when is it appropriate for a small client who's looking to be acquired to make sure that their revenue is 100% GAAP, and when is it appropriate to just disclose the GAAP departures. So walking my clients a lot through that, but also providing all of the bookkeeping, client accounting services, and advisory leading up to those moments. A lot of our clients, though, never ended up looking toward an exit. They weren't looking to get acquired, but they also had those needs just on an ongoing basis for whether it's their banking needs or just for their investors. I don't know, Craig, did you have anything to add to that?
I was going to ask, how many clients did you have?
Craig, can you give the accurate number? Because you tracked that more than I did.
So we had, towards the end, I think we had about 16 or 18 clients. We would do anywhere from just more traditional bookkeeping, if you will, on some clients. But other clients, we would usually partner with a bookkeeper and kind of do not just the transactional work, but also all the strategic work. There were some clients that were more geared towards Lynnette's skill set as far as, hey, we need to get a little bit more insights over the activity that we're doing. And a little more geared towards mine. Like, not only do I need those insights, but I also need to know, looking out 6, 12, 18 months, where am I going? What do I need to be aware of? I'm looking to sell my business. How do I get the most value out of it? And then the end all be all for every client is help me with cash flow, right? And so I've done quite a bit of work around cash flow forecasting and got my own kind of system with that I would bundle and sell into the services.
Got it. So these were much larger clients than a lot of people think of when they think of client accounting services. You know, these are not just bookkeeping clients. You're doing the month-end close, you're doing rev rec, you're doing cash flow forecasting. And did I hear? Go ahead.
Yeah, I was gonna say, I think that just hearing you say it out loud, our approach often was we'd get brought in for the fractional CFO or controller work that they either knew they needed a cleanup or they were worried they were going to get audited or whatever the reason may be. They were brought in for the higher level service. And then once we provided those services, we would engage with them to kind of take over either the full book of accounting or work with their existing staff. It was actually really common for me, especially, to work with a company's existing staff and manage them as a third party to come in and do the month end close, but I'm closing their work and going back and giving them feedback and training of how they can do a higher quality job. Most of the time we got brought in for that, we wouldn't end up doing the transaction level work ourselves.
Yeah, oftentimes we would pick up a client that had a bookkeeper in place that was doing kind of that traditional bookkeeper model, and they just needed something a little more specialized and concierge. And that's really what we offered was more of that high touch, high value, kind of more a lens on just the whole strategy, but as well as, hey, you need someone to be able to translate what the banker is saying, translate what the tax CPA is saying, translate what your investor is saying, because oftentimes these owner operating businesses, which a lot of them were, they had a great model from the business side, but they didn't understand the finance side of it, and they didn't have a partner in that.
Yeah. That sounds like a great model or a great type of client to have, because if they have somebody in-house, you're not getting bugged to like send an invoice all the time or make a payment to a vendor. They're doing that day to day. Now, the challenge is you have to manage people who are not under your direct control. So I imagine, Lynnette, that sometimes closing the books could be a bit of a challenge, right? Ensuring the quality and all that.
Absolutely. One thing that really helped us with success in that arena was having very well-defined boundaries between what our staff did and what their staff did. So Craig and I had employees who worked for us, and they would do very specific slices of the accounting for these larger clients. So if the client staff is sending their client invoices for the services that they're providing, our staff will go in on a weekly basis or monthly basis, bi-weekly basis, just depending on the volume of transactions the client's generating, and just take a look at that group of transactions that were generated by staff. So a large part of our success as a firm was in customizing QuickBooks Online to give me the reports I needed to review my staff work and for my staff to review their staff work, like the client staff work. So adjusting the audit reports or other reports to give us the relevant pieces of information to quickly identify where people were falling behind, where there was challenges, whatever the pain point was. So we got really good at diagnosing where we needed more oversight because we had so much touch and interaction with client staff.
So it sounds like
be efficient.
It sounds like you kind of had this service package pretty dialed in. So that can't be the reason that you wanted to sell the firm. it wasn't a fire sale, right? You're not like burned
No.
out, or just like looking for more structure, I suppose. So yeah, like when did you two decide you wanted to merge with a larger firm?
So I would say that we've always considered it to be a possible option. You know, when you say, what do we want to do 5 years from now? What do we want to do 10 years from now? It was always on the list. Craig and I knew from the very beginning that we had different tolerances for how much work we're comfortable doing. I had always been in this space, not necessarily as a lifestyle business, but as a needs-based business. I needed to make enough money to pay for my kids' medical bills and for other life circumstances that had come my way. And so for me, I wanted to spend only enough time working on it to do excellent work and make enough money to meet my needs. Craig, on the other hand, and I think his story is more common, potentially, he wanted to grow a business. And so those outcomes for us weren't always aligned goals wise. And so I'll let Craig talk about what options we from the very beginning kind of saw as possible directions that we'd be going with it.
Yeah. So like she said, an acquisition was kind of always in the back of our mind, but towards the end of Click back in 2022, was coming out of COVID, our life had gotten really enmeshed, being married, in that we needed to figure out how to separate ourselves. And if I really wanted to go and grow it, and Lynnette to spend more time with the kids and to really help get them through school and get them the base that they need, and not feel like she's having to split time between family and work, we knew that we needed to dispose of the business one way or another. And that's kind of, we didn't necessarily think that was going to go that way. I had also contemplated buying a bunch of tax practices and kind of stringing them together, as we're seeing in the world right now with a lot of consolidation and kind of under 20 people practices. I toyed with that idea, and I even toyed with going back to be a CFO for, an investor-backed startup or something to that effect. Ultimately, we landed on being acquired, and to roll into that, because I really do love the work I do of, not just being a fractional CFO, which I'm actually stepping away from at the moment, and really building a business and leading people, training people, fulfilling business owners, and selling the work, right? Being more organizational transformation type work.
Yeah, I feel like this is something that people really don't understand when they start an accounting firm, is the difference between being that expert service provider and being the business owner, and getting yourself out of the client service. I mean, a lot of times it's the owner that's the biggest blocker to that.
Yeah.
Like, so you figured out pretty early that you wanted to get out of, being that client-facing CFO and build a business.
I don't know if I'd say pretty early. I mean, it took me about 5 or 6 years. I'm kind of a slow learner that way. But I
would say that's not bad. Like some of us, it can take 20 years before we figure that out.
Well, in my defense, it was probably closer to 18 years or so. It's all the work I've been doing. Stepping away from client work probably about 6 months ago. Even when I've come into the larger firm, I still took on a lot of fractional CFO work for a lot of clients, and I'll occasionally step in, and usually it's on due diligence work at this point, because I know it's time bound, right? Like, hey, you're looking to be acquired. I know you guys have a target close date 12/31. Sure, I can throw 20 hours onto this project, right? Just having better boundaries with the amount of energy I put into client work, rather than it being open, kind of open framed.
I also want to give a reflection about the way that as a spouse, how Craig and I observed one another working really accelerated, I think, an exit in a really positive way, because we know each other so well that Craig was able to look at me and say, I see how you work. I see that this particular type of work isn't healthy for you. It's not fulfilling for you, and vice versa. So I was able to look at Craig and say, if you're spending time on this particular kind of work, that I can tell in your body language, I can tell in how you interact with the family, or your need for getting a lot of space, taking a lot of walks, this isn't healthy for this particular area isn't healthy for you either. And so we were able to help each other pinpoint where we're the most fulfilled. And one thing that I will say about Craig is we were able to see together that he needed a larger team. He's a natural manager. And so managing me wasn't healthy. But either that meant that we had to hire experienced, talented staff to work with him, or we needed to go somewhere that had more staff that he could tag team with and interact with. Because, and I think a lot of people in Craig's position probably feel this way too. Craig would get really excited about a project or a big project client-wise, and then there are other projects that he's like, I want to delegate this one. But when you're a small boutique firm, you can't exercise the delegation, or you can't delegate out work that's unfulfilling for you. So if we look at things like 6 working geniuses or other metrics where you say what somebody's good at, when you're a small boutique firm, you have to provide all those levels of every project. And so we had to decide, are we going to grow Click P&W to the size where we can specialize in our fulfilling tasks, or do we go somewhere where it's bigger? Where do we let Craig go somewhere where he can exercise that? And being in a couple, being married and enmeshed, as negative as that is, was also a silver lining into helping both of us be more fulfilled.
Yeah. So you looked into, or you thought about doing your own roll-up, like growing by acquisition with other small firms. Why did you ultimately decide not to pursue that path, Craig?
So the amount of work it would take to buy a book of business and the amount of capital, I just didn't feel the value was there when there's so much work out there. Like if you really are a natural salesperson, which is pretty rare in the accounting profession, I like to count myself as one of those people. I can go and sell the work no matter what. Finding the people to do the work is something else. That can take a little more work. On top of it, I just don't like doing taxes. And I didn't like being the person that was signing the tax return. And so I tried kind of poaching a couple people that I knew, some friends. I'm like, hey, why don't you team up with me and do this thing? And I'm like, nah, you couldn't match the benefits. I'm kidding. And I started realizing when I was digging into it, 2022 was really when firms really started cranking up the comp models, especially for experienced people, and really expanding those benefits through COVID. And it just became cost prohibitive.
Yeah. Getting somebody like that is almost impossible these days in a small firm, because you cannot offer the benefits that a larger firm can. And it's almost impossible. Try finding a manager or a director.
Oh, I know. With my growth, I've definitely needed to find some of those people.
We ended up tag teaming with some other small boutique people too, to do tax returns for our clients. And as much as that worked, that's not a growth model, right? Because we're partnering with them, and that's a great relationship, but that's not growth.
It's also not ideal for the client, because then they have multiple providers, right? And we all know one-stop shops provide a better experience.
Yep.
Yeah. Okay, so let's talk about the firm that you merged with, Sweeney Conrad. Mm-hmm. How did you find the buyer? That's one of the hardest parts of this journey. I know a number of small firm owners who have been meeting with people for months, years, and they have not found the right buyer yet. So share your secrets with us.
Yeah, Lynnette and I, we actually started our career at the same accounting firm, which is Sweeney Conrad. And through our career and everything else, they were actually a source of clients for us that they weren't serving because they didn't have a CAS department. Further, we just made sure to keep good relations with everybody and to not burn bridges. And so just developing and cultivating those relationships through 15 years of just intentionality, we had created a lot of good relationships in the industry in the Seattle area. It's, they say how many degrees of separation there are in banking and in accounting in Seattle. It's like 1, maybe 1.5, right? It's like, oh, do you know so-and-so? So in the midst of talking to another accounting firm, it just didn't feel right for me to go to that firm. And if I took it, it would have been a huge compromise.
Mm-hmm.
I reached out to my folks at that I know at Sweeney and just said, hey, let's grab some coffee. And mostly I wanted to hear from him what they had going on there, but also if it was even a possibility, or what they thought is like, hey, do you think this was even something that I could go out and find, or is there any other smaller accounting firm you think I can go into? In that discussion, it came out that the director of my department that I'm in now was looking to retire. And so I boldly just said, well, let me throw my name in the hat, let me see if this would work out with everybody. And I already knew probably 3/4 of the partners still that are at the firm. And so it's just through intentionality and cultivating those relationships through the last few years, decade even, it allowed for the opportunity to exist.
You didn't burn bridges. You maintained relationships, even though there wasn't like a particular business reason to do so. Yeah. The partner who bought my firm, coincidentally, taught me one of the most important things I've ever learned, which is he would say, it's all about relationships. Yeah. Right? All of my success so far in life has been due to the relationships I've maintained. Right? It's important to be good at what you do, and it's important to have a good business, right? But if you don't have the relationships, you don't have this opportunity that you fell into in a way.
I'll also say,
go ahead.
Like, that this partner that Craig is referring to is the partner that so Craig and I each left this firm at different times for different reasons and went to do our own things. And this was the partner who had hired both of us and to whom we had each tendered our resignation.
Wow.
And so it is possible to have these transitions and circle back around.
Yeah.
It doesn't have to be, it's not the end of things, right? Yeah. Everything's always evolving, and maintaining those relationships positively. You never know where you will meet somebody or where you could partner with somebody.
That's why I'm sad when I read posts on Reddit where people are talking about like the negative experience they had leaving the firm, right? How they tendered their resignation and the result was just like, go away, we never want to see you again.
Right.
Right? Yeah. That's just not the right way to approach it. Even with our own staff, right? I mean, when you have staff that go on to do bigger and better things, I always like to think and hope that they'll want to come back and work with me someday if there's a fit.
Yeah, multiple people. I would say just multiple people in that firm have boomeranged to that firm. And that's one of the reasons why I chose it too, is that I knew it had a great culture. And there's partners that have boomeranged too, left in their career and came back and became partner. And I count myself lucky as being one of those people.
So you found the opportunity, partner wants to retire. So there's a slot for you that's opened up, but it can't be as simple as that. It never is. Walk me through how you managed to, make this happen. Did you have to get buy-in from like dozens of partners? How long did this process take?
Yeah, it took about just shy of 3 months to kind of get it from first conversation with the managing partner to signed, sealed, delivered, and walking in the door, which I think is probably a little fast.
That's pretty good.
For both firms. I think the saving grace was that we were a known commodity for them, and that we had positive relationships. And I think a more realistic time frame is probably 6 months ish.
Yeah.
Accounting firms, especially once they get more than 10, 12 principals, partners in the door, they make decisions on the slower end of things. And that's just akin to our whole industry. We just make decisions slowly, and we change a little slower. The conversations we had were less about compensation and pricing and all that, and it was more about, hey, what is this going to look like for me? Because if I step into this role, I don't want to do anything else. Like, I need to really vet that, hey, you guys are really serious about my vision and what I want and the autonomy that you want to give me in order for me to feel like I could be successful. Because ultimately, if I'm successful, everyone's successful. But also, let's have a conversation about, what do you expect of me? and what things, what things are you concerned about, and how can I address those now? And so really it was, setting the table and making sure that we knew what was for dinner, right? And so on both sides of the fence, just really having a bit of a conversation of, hey, I can let this go and let that go, but I know that, 5-10 years, this agreement isn't going to really mean anything anyway. It's kind of like, you graduate college with a great GPA, get that first job. You don't talk about that GPA ever again. And so the agreement was really meant like, okay, if this really does go left, what does an exit look like? Right. If this goes really great, what does this look like for this piece of the compensation if I roll into an equity situation? Right. And so it's kind of thinking of all the situations that might occur because of this combination, or might not occur because of the combination even. Right. And so that was a lot of the conversation. And the slowest part, I think, of the whole thing was getting the whole legal process review and getting, I's dotted, T's crossed, put it in legalese, and then translating it again. Took some energy.
Yeah. I want to come back to that exit clause because I had one and it saved me. And I think it's really important. Everyone should have that release valve in case things don't work out. But first, I'm curious to know more about the autonomy that you mentioned. What were you looking for in terms of autonomy that you were able to get at your firm?
Yeah, I knew I was going to need resources to grow. Sometimes it's monetarily, so other times it's more for what we do in CAS. We should be looking at how do we enable technology to really grow and to leverage it to create some efficiencies and get some margin. The accounting firms in our world, in the U.S. world, aren't on the bleeding edge of technology. We just aren't. So I told him, my managing partner Sam, that hey, I'm gonna be pushing the envelope a lot here, and adding new technology, adding platforms that aren't consistent with the firm's kind of typical model. And he said, you got to do what you got to do in order to grow this the right way. And we know that what we've been doing isn't working right now. And so that was kind of the big thing was, okay, they knew that this piece here needed some energy and effort into it as far as the technology and the energy to move it forward with kind of some vigor. And he knew I could bring that.
So you got your own P&L?
I do, yeah.
And you got your own technology budget?
I do, yeah.
Oh, that's the dream right there. That was my biggest frustration working in a large firm was IT was in a different city and I had to get their prior approval to put in place any apps that I wanted to use in our outsourced accounting practice.
Yeah.
And for a long time, I was forced to use the tax workflow software, which just just hurt my brain.
Yeah.
To the point where I just told my team, don't open it, don't use it. Just update it once a month.
That's exactly what Craig encountered.
That's so important. It's so important to be able to choose your own tech because the tech is the experience, right?
Yeah.
For the client and for your people. Yeah.
The other part was
jump into really quick, just things that we didn't expect is that ended up being such a huge issue, as you said, Blake, that the boutique firms like we were and like you were so nimble. We could just implement and make a decision. And moving into a larger firm, it's not the way they make decisions. They don't move fast. And I think that's true among all the larger firms. And so if you're looking to be acquired, that's going to be a pain point for you if you're accustomed to being so nimble.
Yeah.
Was there something you were going to add to that, Craig? Otherwise, I want to move on to the escape clause.
Yeah, the first firm I was talking to about being acquired, they were a larger national firm. And that was kind of one of the things that when I was talking to them, like, hey, if I wanted to implement a new process or a new technology, what does that look like? And they spelled out this process that was full of bureaucracy, red tape, and just by the time that it would be ready to be implemented, something newer, bigger, better, faster would be in existence. And it would just be moot at that point.
Yeah, exactly.
And so the firm that we implement with Sweeney Conrad, we are a regional one office independent firm, right? And so everything is in one office. So I can walk down the hall, talk to the IT folks and say, hey, what do I need to do to stand this up? And they can help me get it up going. And sometimes it's not as fast as I want. And I think that's a good thing. And Lynnette would probably agree that sometimes I move a little too quick. And so it helps me kind of slow down but at a speed that everybody can accept.
Good compromise.
Yeah, I suppose.
So you mentioned you had an out. And mine was pretty simple. So when I sold my firm, we had in the terms, basically, I could choose to leave within a year and get the same buyout that my partners got. I was the one partner who went into the new firm. My other partners had a buyout, and I could get the same terms as them if I left within a year. If I stayed after a year, then I would convert to equity. So I could kind of feel things out. Ultimately, I did decide to leave, but we had structured the deal in such a way that it really didn't matter, right? Either way, the partner who bought my firm was happy. I was happy. It all worked out. I'm curious what your arrangement was.
Yeah, financially speaking, there wasn't a lot to really kind of argue over. It's just wasn't. I was more concerned about, hey, if this doesn't work out for me, well, what are you going to do with my clients? Like, I want to make sure that they're taken care of. I'm bringing employees in. What are you going to do with my employees that I'm bringing in? How are you taking care of them? And so I took it from more of that angle of let's make sure and let's have some assurances around if I go, these people are still being taken care of. And that's really the angle I looked at it with everything. And so it just got some assurances around that.
Were there any unexpected challenges that you faced in making the deal happen?
In making the deal happen, I think just the amount of time it took for the legal review. I felt like I had to babysit the arrangement a little bit. Like I was kind of poking the bear a lot. Like, hey, however, the managing partner still had a decent sized tax book too. And so like I'm talking to him in September and early October, like anything. He's like, man, this is busy. And then busy season for managing partners is also like from November to January, right? That's like when they do all their things. And so, and he's a newer manager partner too. He just been taking over for a year. So it was really just being diligent and gentle reminders and trying not to be too annoying, but have enough pace being like, hey, I'm still interested. And this is something that creating the expectation of, I want to get this done by the end of the year. And we got it done by the end of November. So I was ultimately satisfied with that.
So 3 months to make the deal happen. And then you have to transition the staff, the clients. Lynnette, this is where you had a lot of work to do, I imagine. Over a dozen clients. How many team members went to Sweeney?
So it was 4 total, and then I phased out.
You phased out.
We had more employees than that who were very part-time bookkeeper type individuals who would not have made a good fit on the transition. So that was a hard conversation too, in order to break it to them that either you need to up your hours to a minimum number per week, because we had some very fractional people who just handled, some simple or just specific tasks, right? And so that was a really sensitive conversation for those individuals, because even though they worked maybe 5 hours a week, that was income they depended on, and they couldn't increase their hours. So we ended up bringing over 2 employees who were near full-time, in addition to Craig and myself, with the intention all along that I would transition out. So I had 6 months to help Craig and our staff get our clients over well transitioned and to get myself out of the game.
6 months, you said?
Yeah, 6 months total. So Craig started in December, I think December 1st, maybe, of 2022. Yep. And I started and our 2 employees started January of 23, which in a CAS practice is you are throwing everybody into busy season.
1099s.
So, yes. and year-end close. And so it was a shock to all parties, I think. And that's where the human element became very important, and the new relationships became very important between our staff and the staff who were inviting us in, surprised to invite us in. So the transition was thrown together very, very quickly. There was a lot of overtime for everybody because, I mean, it's 1099s anyways, but our team we were operating concurrently with one another in parallel using different systems. Because as you said before, they're using a lot of tax software. So they were using tax software for 1099s, and we were using embedded QBO options or other options that our clients were using in order to generate those forms. And so Craig had the unenviable task of managing multiple ways of doing things. Our clients themselves during that time, I think, were holding on based on their relationship. I mean, it's rocky to pull somebody over, regardless of the time of year. And in fact, I would say a big lesson for anyone looking to go through this is that I wouldn't necessarily not recommend January, but understand what you're getting yourself into if you choose January.
I have heard that from more than one person. Yes. Yeah. Don't do it during busy season.
And I think in this situation, because of the partner's retirement, because of the timing, we were all in a situation where it had to be what it was,
right.
And we were going to make the best of it. Our clients, though, going back to the relationship aspect, we had cultivated such deep relationships with these clients because we had fewer higher depth clients that they trusted us through the process. That even if this January was challenging, that we were going to get through it together. And so they held on in faith.
But how did they take the news, Lynnette, that you were transitioning out? That must have been tough for some of them.
Yeah.
I had multiple clients ask me not to leave. And on one hand, that's validating. On the other hand, it is hard to stick with the plan for your own mental health and for your family. I mean, that's tough.
Yeah.
Yeah. We basically made them choose between her and me and said it was me. So it was kind of a hard conversation for some of it. And we even have a client that was given to us from Sweeney from years ago that we brought back into Sweeney, which was a completely awkward conversation. And he actually just called Lynnette like a month ago to talk about something. And it's interesting, the relationships that you build and just remembering that, we created pretty deep, intentional relationships with these clients. And that's why most of them are still with me today.
Mm-hmm.
Well, and to just a lot of those clients are individuals for whom in the end, I ended up providing much more advisory that was not accounting. It was, organizational strategy and really just consulting.
Therapy sometimes, I imagine.
Exactly.
Yeah.
So in that sense, I think that my value to my clients was not necessarily in the accounting sphere anyways. So transitioning the accounting work over to Craig's team and the Sweeney Conrad team, I think once they understood that they were still going to get the same high level of service from a deliverable standpoint, everybody transitioned just fine. I think that most of the challenge was administrative, and that's administering new contracts and explaining to them that billing was going to look different because we had to conform to the way that the firm does their billing cadence and the way that the time gets coded. The way our employees coded their time actually was different. Also, just the administration of your client has to be involved when you move a QBO account from Click PNW's QBO to Sweeney Conrad's QBO. Your client has to sit there and resubscribe and re-enter their credit card information or get onto the new firm's billing. That process alone is so aggravating for the clients.
Yes. If anyone from Intuit Accountants is listening, take note, please.
Well, if I could re-engineer the process of it, I'm not sure how we could make it any easier because there's good legal reasons for why the client has to be so involved. But I can only imagine like if when you transitioned your firm with a higher number of clients, how much, unless all of your clients had their own subscriptions. I mean, that's the trick.
I'm pretty sure we just gave up and ended up having 2 partner accounts.
All right.
Forever,
Okay.
But we had hundreds of clients, and for me, like having a meeting with all of them was going to be impossible. So let the buying firm deal with that.
Yeah. The way we ended up doing it is that I had to sit on a Zoom with every client owner, or whoever was the decision maker who had the credit card and who had admin access to their QBO, as well as, I'm using QBO as an example, but it's also if they had a standalone payroll software, it was this too. It was their state of Washington accounts.
Because your clients, they had set up their own accounts, or you had set it up for them under their logins.
Done it.
Right?
No. So it was the partner account.
Okay.
But we needed to transition it over because and the reason
why
you were
leaving.
Well, yes, as well as the fact that the way that Sweeney Conrad and I think some of these bigger firms do their QBO or Zero or whatever logins is that they're kind of unified. Yeah. And so we can't keep using the old one.
Right.
Because Craig's new staff. So if we shuffle staff, which we haven't even touched on that yet, but if we shuffle staff on and off engagements and they were on a Click PMW login, now we're having to administer a lot, like adding, it's a headache.
Yes.
Yeah.
Also, though, I would say the way around it, whether or not you like it, is if you have each of your clients set up their own QBO with their own billing and not take advantage of any of the Intuit partner discounts, then your client's standalone QBO can just be reassigned to a different partner.
Right.
But if you're taking advantage of those discounts, as they market very heavily, and you're part of that ecosystem, transitioning your clients is very hard.
Yeah.
I think the other way I've heard to get around having to transition all the tech and the partner accounts is simply to, even if you don't do it from like a legal perspective, is to just do it more like you become a subsidiary, where it's Click PMW powered by Sweeney Conrad. Yeah, I've seen that too. And then you don't have to change everything. Even your website can kind of stay the same.
And here's the drawback of that method is that Craig and I, though, had a whole history of clients over the years that we've been in business because we started Click in 2016. And when we first started out, we were taking a lot of the smaller clients. And it's only over time that we evolved into having the fewer number under 20 in-depth clients. And so we have all this history of these smaller businesses, and those companies were not moving over. And so there's just from a confidentiality standpoint,
right?
Like we couldn't give access to that partner account because we have all the history.
Got it.
Furthermore, Click survived the acquisition, and Lynnette was still tied to it as she was wrapping up a couple of engagements that didn't make sense for us to move over to Sweeney. It was like, well, we could interrupt their whole thing for 3-4 months of service, which they were being acquired. Like we knew that it didn't make sense for us to move it over.
Yeah.
It's funny. This whole thing kind of reminds me of the challenge that nobody, I think, has ever solved, which is like you're transitioning from like Zero to QuickBooks or QuickBooks to Zero or QuickBooks to NetSuite, and you've got that cutoff date.
Yeah.
And you aim for that cutoff date, and you say, we're never going to close the books again in the prior accounting system. And you end up doing it in both for 6 months.
Yeah. Well, so to clarify too, what Craig said is that when we had those conversations with our Click clients that we were going to be making this transition, we did have a small handful who said, we support you and we're not going. And there are some different reasons for that. One is that if they weren't going to be with us, they had another friend who was an accountant and they felt the allegiance there. And so we helped outside of Sweeney Conrad, still in Click, spent several months working with their new accounting firm, which is actually a competitor to Sweeney Conrad. But because we had those relationships, I agreed to stay on and help with the transition. And then I had another client who said, this is great timing because we've been considering, and I had been counseling them to get a full-time controller. Yeah. Right. And so in their situation, rather than moving to Sweeney Conrad, I worked with them for several months to onboard a controller and get her trained. So that all doesn't fit in the box of moving a firm over.
In the instance of the one client that went to the competitor, I actually really like that because I got some unique insight into their practices and how their onboarding went. And I was like, I see some opportunity for improvement on our side here. Anyway, it's just, I got a little
You can secret shop. Yeah, secret shop the other firm.
Yeah.
That's great. I always wondered if sometimes my prospects were my competitors.
Yeah.
You know, it's a smart thing to do.
Right?
Go get quotes. But I digress. So let's talk about how things went at the new firm, the clients you did transition over, Craig. What was your retention rate like? Often you can lose a good number in that first year. Even if they come over, they might say, I don't like it. I know that happened with my book of business. I had to take a little haircut on my buyout because not everyone stayed. How did that go?
Think of the 12 or 14 clients we brought over. I think only one left. And that's the one that went to the competitor due to a personal relationship in the first year. In year two, so starting in 2024, the way that our work had been working and everything else, our business model and the size of Sweeney has grown to the point of I'm pricing them out. And their business isn't as growing as fast as Sweeney. And so Sweeney's actually outgrown them. And so, reluctantly, they've said, hey, I totally understand. I'm going to go with a different service provider. And it's been hard. I think I've lost 3 or 4 of those clients. One transitioned out, was a fractional CFO gig of mine. And I told him, hey, you're going through this huge reorg and your business has grown substantially. Like, it was a bit of a turnaround when I got in there, and it's went really, really successfully. And I'm like, you now need a full-time CFO. Like, your top line revenue has tripled. Like, go get a CFO. You're good now. Like, go into the role, right? So for the most part, the retention piece of it and the way my compensation worked with that piece of it, it went, I think, better than planned, with only losing one. And they were a smaller client of ours too.
Yeah, that's great. I mean, one out of more than a dozen.
Yeah. And like I said, we established there were larger, our clients typically were a little bit on the larger side for us. I remember looking back 6 months and I'm like, I am shocked that we haven't lost a client, outside of the one that had the personal relationship. But it was really a testament to my employees and to Lynnette and our intentional relationship building with all those clients, and really just that high level of communication we had in the transition, which it was extreme. It was probably over communication, but with change, you have to kind of over communicate with them.
Yeah, way better to over communicate than under in that situation.
Oh yeah,
and it's also just a sign of what a great profession we have right now. We're in such high demand that if you just care a little bit, you can do really, really well.
It's amazing what happens if you just pick up the phone.
It's seriously like, we need to crop that out, plaster that everywhere. Just pick up the phone, talk to people. Yeah. And it's amazing what you can do. I know that since you have joined Sweeney Conrad, you've had some pretty great growth.
Yeah.
So where are these clients coming from? Are they clients of the firm? Are they new people? How has that happened?
I'd say it's about 50-50. Internal kind of cross-selling with our tax department. It's about half my leads. The other half is just the relationships that I had established and nurtured through the last 15, 20 years, along with Lynnette. Lynnette gets still leads sometimes, and she passes along to me. Just those relationships that we've built, the networking and the intentional, business development, sales, whatever you want to call it. It's really just, saying hello, exchanging Christmas cards, grabbing coffee, buying lunch, whatever it might need to be. It's like it just takes a long time for those relationships to really cultivate to the point in which those business opportunities present themselves to you. And that's about where it's gone. But yeah, it's about 150% growth in about 18 months for us. It's a little longer than that now, but when I measured it back in the spring, that's what it was.
Lynnette, thinking back on your experience and what we've talked about today, what advice would you give firm owners who are thinking about selling their CAS practice?
So I thought about this question this morning before we get on, and 2 things really hopped out at me. One we just said, which is that communication is key. people can fill the void if they don't have information. That could be your employees, the acquiring firm, your clients. And when in doubt, just pick up the phone or send the email. If you're on texting basis with somebody, text them. Whatever it is. But oftentimes it wasn't until you, me, or Craig initiated a conversation with an employee or a client that we got the feedback. People are not likely to initiate giving you feedback when they think you want to hear, this is a great decision. They think we want to hear, we're so happy for you. When in reality, what we want to hear is, I'm worried about my billing. I'm worried about my payroll. And so to give them the opportunity to say that is powerful, because even in expressing their displeasure, you're strengthening the trust.
Mm-hmm.
So that's one of the things. The other thing is, think really reflectively on what is it that you want. It might be simple. It may just be that you want the highest payout. But like Craig was saying when he was negotiating the deal, it was less about the money, although that's important and that's a huge motivator. At the end of the day, this decision was irreversible. We were putting the business into another business. And if it didn't work out, we had no recourse on that. Like, it was gone. We couldn't just go start a new boutique CAS practice. Now, maybe we could, maybe we couldn't, but it would kind of be dead to us at that point. We'd have to go in a different direction. And so in that sense, it took a lot of premeditated, reflective, what do we want out of it? And be honest with yourself.
Mm-hmm.
What is it that is important to you? And if you get a feel, like Craig said, we pursued another accounting firm and the vibe wasn't right. It wasn't tracking.
Yeah.
And there's nothing wrong with that. Like, don't take a deal out of fear. Stick around and really be true to what's going to be best for you, or if you have a family, your family.
Trust your gut is...
Yeah.
I wish I'd trusted my gut more when I was younger. That really, even if you can't describe it, if you get a bad vibe from like somebody you're going to work with, often that tends to be what happens. You have a bad experience. I don't know why that is, but
energy follows energy. And that doesn't have to be that bad energy or good energy. Yeah. But if that's not a good fit for you, just like when you interview a new client, that may not be a bad client, per se, but it may not be a good client for you. It might be a better fit for somebody else in your town or your city. Take advantage of letting that go. Don't follow the energy that's not matching with your vibe. You're not going to be a good fit. Just like Craig wouldn't be a good CFO at every company. I wouldn't be a good controller at every company.
Craig, anything you want to add? Any sage advice for our listeners who are thinking about selling a CAS practice?
Listen to your spouse.
Yes.
Just listen to the people around you. You don't have to do it all yourself, and you shouldn't do it all by yourself. Like, you should have partners in this conversation, and find a mentor if you're not in business with a partner, as it is if you're a single shingle type person. You've got leaders and people around you that you've worked with. Have them sign an NDA if it makes you feel better. But this is it's a big decision. It was probably the biggest decision that we've made outside of starting the business, right? And it just takes a lot of energy, intentionality, and quite a bit of humility too. Mm-hmm. You've got to really put your ego on a shelf for something like this.
Well, I think that's a great way to wrap it. Before we go, Lynnette, I'd love to hear what your plans are for the future. What are you up to these days, and where can people follow you online?
Sure thing. Thanks, Blake. I took the year and a half after we sold Click to effectively take a sabbatical and hide under a rock. In my journey, I actually dealt with a lot of cyclical burnout. I think just being a bit ambitious and also having an active family. So I'm moving into a space of writing, speaking, training on burnout prevention. It's still in the works, so you can follow me on LinkedIn right now, but follow and have faith, because I'm still building it. That's where I'm going, though. That's where my heart is.
Yeah.
I want to see us grow our professional lives sustainably in ways that are really fulfilling and not kill ourselves in the process through unsustainable practice.
Well, as somebody who covers the accounting talent shortage basically every week on my other podcast, I wish you the best in that mission, because we need it. Burnout is just, it's a plague on accounting. And it's so strange to see accountants who have figured out how to create this flexible lifestyle and have work-life balance and actually make really good money working relatively few hours wherever they want, anytime they want. And then you have this whole group of accountants who are like miserable working in cubicles. And it doesn't have to be that way.
No.
So.
Well, and to your point too, those of us who can find the flexibility, be entrepreneurs, create our own paradise on earth, as it were, like we can make it work for us and be efficient, that can lead to burnout too.
Right.
And I think our profession isn't alone in it. And there's some really actionable things that we can take as individuals as organizations. And that's the space I'm going to kind of move into.
And there's a great middle ground, which is these mid-sized firms like Sweeney that you have joined, Craig. I'm eager to hear what your plans are for the CAS team there and where people can connect with you.
Yeah, you can follow me on LinkedIn or check out Sweeney Conrad's website, sweeneyconrad.com. That's SWEENEYCONRAD. I'm just going to keep growing. My 2-year plan when I came into this is almost fully executed. I'm probably at 6 more months about it, so I'm going to be a little over 2 years. But it was a bit of a stretch, and I knew that. Really, I'm looking to build kind of a top-notch national CAS practice, and we're well on our way on doing that. And just trying to create a more of a national presence through speaking on panels and things of that nature, and really just providing value to the profession that, we need to rethink the way we do our work, and to start thinking more entrepreneurial and stop thinking like just transactional folks. Like, we need to be advisors. The AI revolution is coming for accounting. It's not quite there yet, but I think it's, 18 months to 2 years away from a lot of the transactional work not being needed. And so we are the human element, and we need to re-engage with that piece as accountants.
Are you hiring?
Yes, I'm always hiring. I'm always looking for good people, and I'm just bringing in clients, looking to onboard about 2 to 3 clients a month going forward. So my people know that. So if they're listening, if it's the first time hearing it, then they weren't listening the first time.
and if you're listening and you're looking for a role outside of, say, audit, you want to, make the leap into, but you want to stay in public accounting, check out Sweeney Conrad, right? It's client accounting services is so rewarding. I'm so glad that I got to have a career in it, and I hope more people do. And by building that national practice, Craig, you are creating a place where people can go and stay in public accounting and feel like they're really contributing something. So thank you for that.
Yeah, absolutely.
And thank you to everyone who has joined us live. You can attend live Earmark webinars. Go to earmarkcpe.com/webinar. Or is it webinars? Try both of them. Hopefully one of them works. And you can register for upcoming events. Join our mailing list on that website, earmarkcpe.com. And if you haven't tried it, try the Earmark app. You can get CPE for this webinar, this interview, and all of my other Earmark podcast interviews, including dozens and dozens of shows that I do not host as well. And you can get your IRS continuing education. You can get your NASBA CPE for your CPA or CMA renewal. And I'm looking forward to this interview being a course on the app. So thank you both for being CPE instructors.
Thanks, everyone.
Thank you.
We'll see you around. And before I go, I'm going to play a quick video explaining once again how to earn CPE with Earmark. Today's event has ended. To earn CPE, go to earmark.app or scan the QR code on the screen. Then log in or create your free account. Search for the course by tapping on the magnifying glass icon on the home screen and then entering the name of this event. It takes a few days to make the course, so if you're attending this event live, keep an eye out for an email letting you know when the course is available. Pass the quiz to earn your CPE, then tap the button to email yourself a certificate. Stay tuned for more events from Earmark. Thanks for joining us, and we hope to see you again soon.